Thank you so much for getting this channel and this community past 10,000 subscribers. Now we're well on our way to keep moving forward and growing the community as we pass 11, 12, and 13,000. But I think it's very important to keep sharing with you as much as I can based on my experiences, my learnings, so that you guys can use that, leverage it, so you're not having to make those same mistakes. Now in this video, I put out on my Instagram, so if you're not following me, definitely go follow me there. I've got a link in the description below. But I had asked people to ask me questions as to what they want to see in a video. Now I want to make this as personable as possible so that you get to learn a little bit more about me and not just, the sort of stuff I talk about and invest. So in this video, we're going to explore 10 questions that I had come from you guys. And in amongst that, we're talking anything from real estate to price predictions in terms of what real estate looks like, but as well as going beyond that with, collectibles, cryptocurrency, and a little bit about myself and my personal journey. So if you are interested, then keep watching. Hey guys, my name's Ravi Sharma and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button and drop a thumbs up for the video, just so we can share these videos out to more people as we work with the YouTube algorithm. Now, in this video, we're gonna talk about 10 questions, my answers to the 10 questions as transparent as I can be, and this is questions that I've received from you guys. So let's just jump straight in. Question 1, what was your first experience in investing into the property market? Now I've got a video discussing exactly what that looked like end to end in real detail, but I basically started in my early 20s, almost like 7 years ago now, and it was a very daunting experience. I did not know anywhere as much as you guys do right now. So if you're interested in watching that video, saves me from actually exploring that again and boring you with the details, there's a video up here that's pop up. You can definitely go check that out after this video. Question 2, are all your investment properties interest only? So this is interesting. When you're in your accumulation phase, I usually say to people that this is the way that we need to think about it, right? If we're going through accumulation, our main priority is to purchase as many properties as we want. So this is exactly what I did. So in that initial period when I'm trying to accumulate more properties and build my property portfolio, I was interest only. Now for me, obviously I've been in the game for about 7 years now. I'm probably now moving some of those properties into a debt consolidation phase. So they've now ticked over from, interest only repayments to now interest plus principal. And I can do that because some of my properties are now attracting a certain amount of rent, which now covers the interest and principal component. Now this sometimes does take time, but it also depends on the areas you're buying in. So for me, it just makes sense to, adapt, keep looking at my investment plan. And for me, I look at my strategies and investment plans for real estate, cryptocurrency, and collectibles, possibly every second or third week. And that's because that's how much the market is changing. Now with real estate, obviously it's a heated market at the moment. Things are changing, but obviously they won't be changing as quick as say something like crypto or something as like collectibles. So it just makes sense for me to keep looking at those plans, keep adapting and seeing what needs to fit where. And as part of that, that means some of those properties are now interest plus principal because now I intend to pay some of that debt down, not because I want to be debt free, but because I want to be using that capacity to go out and do other things. So for me, not all of these properties are now interest only. Question 3, price predictions for assets you invest in, property, cards, and crypto. Now this is obviously a really big question. It's very generic in terms of the response I can give because that would then mean like an hour-long video and I don't think you want to be hearing me for an hour. But I would cover off, say something like with property, my firm prediction here or my firm feeling, gut feel, is that based on all the historical data we have, all the research we're doing, with people on the ground, talking to agents, as well as looking at supply that's coming into the market and what sort of shortage we have in housing, I still feel like really good areas will attract really good yields, but also long-term growth. And I think the next 3 to 5 years is such a unique opportunity for so many people. And no, I'm not just saying this because I'm a buyer's agent and none of this is financial advice, but I think just based on the research we're doing, the research available to you guys already, like look at what I've been saying for the last 12 months on the channel, go out and watch those videos from a year ago, and you're gonna realize that a lot of those things are now plugging into place. The next 3 to 5 years, I think we're gonna see a lot of that inflation really get caught up into these hard assets. And I think people are gonna start realizing that inflation is not our friend and hyperinflation is around the corner. So what that looks like is, the debasement of our currency. What does that look like? Well, there's so much to cover here. And I just think the safest way to play it, as most people think it's, keep it in cash. I prefer to have a lot of that cash just tied up with hard assets and things like Bitcoin. We'll touch on cryptocurrency, but hard assets that have a finite supply is really key here. And that's why I look at these assets, right? With real estate, land is finite in supply, and that's a really big key understanding, especially when you understand supply and demand. And that's why I'm so bullish on real estate over the next 3 to 5 years. After that, I think we see a bit of a correction, and I think it comes in the form of lending criteria, comes in the form of interest rate increases. And before people sort of jump on and go, well, if the next 3 to 5 years is great and then we have interest rates, well, why would I purchase now? It's really going, well, we don't know when the crash is coming or the correction, if it even comes. A lot of people expected in 2020 for it to come, and they missed out on the best opportunity I think we'll see for a really, really long time, if ever. And so if we are looking at those things, we just need to go out there, mitigate our risk, have the emergency buffers in place, and know what our risk appetite is. At the end of the day, the next 3 to 5 years, my intentions are very clear, which is to make as much as I can, because what will come after that, if there is a correction, is so that I can go out there and buy properties or assets out there that are 30, 40% below the market value. So for me, I'm very bullish on property. I think with cryptocurrency as a whole, I think we've seen a bit of a consolidation over the last couple of weeks. I think it's going to continue for the next couple of months. And then I think we're back on track. I think we're moving in an upward trajectory. It plays a really big narrative with the amount of inflation. We've got countries coming in and now making it official ledger currency. I think there is a lot happening in the space. And then when you switch over to like decentralized finance, there are so many holes that decentralized finance can plug in with smart contracts and things like that that we aren't even aware of. And I think as that becomes more mainstream, that is going to play out a beautiful narrative over the next 5, 10, 15 years. So I'm very bullish on that as well. But again, the volatility is what keeps people away from crypto. So that's something to keep in mind. I'm very big into collectibles with trading cards. So, Pokemon, Dragon Ball, things like that, where there's so much nostalgia, but then there's also new brands that are coming out, and something that I will talk in a bit more detail in the coming future. But there's so much happening in that space is you can get caught up in it. And if you don't really understand what you're looking for, it's a weird world out there. So you make mistakes and you could lose, quite a bit of money. So for me, I think when you're looking at collectibles or trading cards, you need to have the proper research. And I think it comes from a passion. For me, if I'm enjoying those sort of videos and I get to watch, pack openings or listen to what sort of products are coming out, how much supply is out there, why would people want to buy these things, that interests me a lot. So for me, that space can generate huge returns, but it also comes with a lot of research that's required. So if you're not someone that is passionate about it, spends your spare time doing it, might be something that you want to leverage from someone else. But I think what we've seen in the collectibles world is through COVID, the lockdowns and things like that, it took off. Prices for Pokemon cards, all trading cards just took off. Now we're seeing that retracement, 40, 50, 60% on some of these products. And that's where it comes down to good quality products. So the same thing with real estate or cryptocurrency. If you focus on the good quality assets, you're not going to see as much of a drawback, and they keep their strength throughout, a correction or a bear market. So that's how I would be, going through for the next couple of years. Question 4, what is the best way to start building a portfolio as a 19-year-old with a passion for real estate? I love it, guys. I get all these messages, not just for this video itself, but I get DMs, I get emails saying, I'm 18, I'm 19, I'm 20, and I want to get started. How do I start? And so a big thing that I think a lot more needs to be focused upon is education is one thing, right? You're watching these videos and it's great. You're actively looking for information, which is awesome. But I think what you need to start doing as well is start figuring out, how do you get a loan, right? How do you get the right investing mindset, and then going out there looking for practical use case. So what I mean by that is, if I can go out there and learn how to buy real estate, how to get a loan and things like that, then that's one part. But how do I actually get a loan? That means I need a good salary, I might need a side hustle, how much money do I need to invest, and how much do I need to get started? So I think there's two parts to this, and I advocate really big on the education piece, because 19, 20, I'm assuming maybe you're at uni, maybe you are, a trainee, you're not earning like $100,000, $150,000, right? So right now it's important, while you've got time, get the mindset, right? I've got a course that you can get down below as well, Confusion to Clarity. It walks you through step by step how to get the mindset before kicking in and going, oh, here's my money, chuck it in. Because the thing is, once the money goes, it doesn't come back. And if you make a mistake, it definitely doesn't come back. So what I say is, take some time, take a few weeks, go through the course step by step and understand what your mindset says to you, and then go, okay, now I know the mechanics of how to get a loan, what am I looking for? Then go through the buying process. And you might find that if you have a passion for this stuff, you may not ever have to go and get a buyer's agent. And that's what I keep saying to people is if you learn this stuff yourself, you could save yourself a lot of money. And so take the time, be patient when you have the time. If you're moving along and you're going, okay, well now I need to look for work that you're passionate about. Because I can tell you now, if you go for something that just pays you the highest money, how much time are you gonna actually spend doing it, right? You need to look for things that right now at 19, 20, 24, 25 even, you have time on your side. Look for things that really get you excited because that stuff is going to get you to work harder than anyone else, and that competitive nature is gonna come in and you're gonna excel and make a shitload of money, right? And that money is not so much going, oh, well, you know, the money alone will get me financial freedom. No, it's that if you've got the education and the investing mindset, now you're doing something you love, now you're gonna bring both of them together. And by the time you're 30, 35, 40, you will have real estate, you'll invest in whatever else you want to, and you'll be running your own thing, which means financial freedom's already achieved. So that's how I would be spending my time when I'm 19. How much money should I have saved to start investing in property? I've got a video here about how much to get started with, and you can check it out here. I think with a market that is moving so quickly, we've gone from 2020 where you can get assets that are really good quality properties for around that 250 to 260 mark. Now I think you're looking at $300 to $350, $400,000 for a property, a good asset. So if you're looking at that, you then need to ask yourself, am I going in with a 10% deposit? Am I going in with a 20% deposit? And am I doing this by myself or am I going with a buyer's agent? So if I'm going out there and I'm buying it myself, for me, I think debt is so cheap and I think it's gonna remain cheap for a long time. And when I say cheap, I'm saying under 4% or 5% interest rates is cheap debt. So for now, if you're getting a 2.5%, 3% interest rate on your mortgage, I think that's super cheap. And so for me, it's going, how do I take advantage and leverage as much as I can? Use cheap debt, get into properties as quick as possible. So for me, it looks like a 10, 12, 15% deposit rather than a 20% deposit. And then looking at properties in around that 300 to 350 mark, you've got to look at some of your costs. So you've got a deposit, so 10%, let's say, of 300K is $30,000. You then have stamp duty, which could cost you another $7,000 to $10,000. You then have things like, your legal expenses, so conveyancer to look over your contracts. Again, another $1,500, $2,000. Then you've got pest and building inspections, another $1,200 to $1,500 there. Then if you go ahead and you get a buyer's agent as well, then there's a cost for that. And that could range from anywhere from $12,000 to $18,000 per property. So it's just something that you need to put all together, look at what you can afford. And I always say, have an emergency fund. Especially when you're going for your first property, you don't know what's gonna happen. You always wanna take as least of a risk, but at the same time, you still wanna be taking those risks because that's how you're gonna proceed into making financial freedom a possibility. If you sit there and try and take the safety option, well, that's what everyone else is doing. 99% of people won't get financially free ever. Right? Ever. They'll rely on the super, they'll rely on their pension at the age of 65, 70. And for me, that isn't financial freedom. I don't care what anyone says, but I would much rather be traveling Europe for 3 months and be able to pay for it with my assets passively at the age of 35, rather than going and waiting till I'm 70 to go on some old man's cruise and then enjoy life that way. That's not financial freedom for me. Could be different for you, but at the end of the day, I think when you're watching these videos, I'm advocating for the fact that you can still have lifestyle today if you invest correctly, but then start planning for what looks like, the future in 5, 10, 15 years where you can take advantage of both worlds. 6, do highly negatively geared properties ever work for someone wanting to scale 10 plus properties? Look, there is only one scenario in which this works. And I think, well, there's two actually. One scenario is go back 20 years ago, and I think that's where you can still make those things happen. The income to debt ratios, they work out for you because the prices aren't so crazy. And then the banks are putting into place through mortgage brokers and, lending specialists that when you go in for a loan, it's gonna allow you to keep taking on more debt. So either go back 20 years, which no one can do, or you start looking at how do I make a load of money from my salary, from my side hustles, or from my business. At the end of the day, the way that it works, in order for you to scale up in a property portfolio, you need strong cash flow, right? You need capital growth, but you also need cash flow. Now, the cash flow can come from good quality properties giving you positive cash flow, or it can come from the form of you making a lot of money and it satisfies the bank's criteria for you to take on more debt. So if you've got a combination of those, you'll do fairly well, and you don't need to be making like $500,000 to $1 million a year just to go and purchase property. We also need to think about, 10 plus properties. We need to get out of that mindset. It's not about how many properties, it's about what these properties do for you. So if you're looking at scaling to 3, 4 properties, that could be the equivalent of a dollar value or asset value of someone who's got 10, 15, 20 properties. At the end of the day, that does not define anything. You need to have a proper strategy. You need to understand what specific properties and why do you want 10 and not 5. I mean, it's a less of a headache if you got 5, but then with 10, you've probably got more choice. So some of the things that you need to think about when you're scaling up, I personally prefer getting strong cash flow properties. And if I have to get something that's a bit negatively geared property, then I'm going to look at how do I link up 2 properties to go, well, this one's really good cash flow. I can now go and afford slightly negative cash flow property to attach to it in the hope that I can go develop that property later on, or that it's going to be a really good growth property for my portfolio. Question 7, what's your favorite cryptocurrency project to invest in? I don't really like talking about specific projects that I look at, but I think for me, it's very evident that Ethereum is the number one thing that I would be looking at. Even beyond what I look at the fundamentals with Bitcoin, and I'll invest in Bitcoin as well. But I think with Ethereum, the use case, the way I think of it is digital oil. There is so much use case, and it's the bare bones of what decentralized finance looks like. And so for me, I think with where it's placed right now, I think it's heavily undervalued. I don't really pay attention to the little movements up and down 6 or 7%. I've got a solid DCAing strategy, so dollar cost average strategy with how I build up my portfolio, and Ethereum makes a large part of that portfolio. So if you're interested to know how that works, I've got a playlist on the channel, Cryptocurrency Australia. Go and watch those videos, get educated. But when it comes to the project itself, Ethereum by far is my favorite. And not just because, it might make the most money. No, there's probably other projects that'll make a lot more. But for me, it's a set and forget, especially with what it's bringing to the table. And I think in the next 5, 10, 15, 20 years, I think owning any part of Ethereum, in terms of the project itself, owning that space, I think it's gonna be massive. So whether it's coming from the form of a currency being used, on the NFT platforms, or if it's just going, I need to hold a certain amount in order for me to go develop on their platform. And obviously the network effects of, being the first mover in the space is massive. So for me, Ethereum by far. Question 8, is it possible to get 20 plus properties on your own in today's lending environment? I would say that it is a lot harder and more difficult now than it was 15, 20 years ago. And that's not because interest rates, they're lower now, they were higher back then. So what are you talking about? It's just how banks assess debt now, plus housing affordability. This has always been a concern. It's been getting worse and worse. And that's why you might find it more difficult to go out there and purchase numerous properties versus...
Hey, you know what? That process was really easy 5 years ago.
I know it for myself, 7 years ago going in there, the questions they used to ask was so small or minimal compared to what they ask now. And then the way that they work it out in the backgrounds, the buffer rates that they have in the back, the shading that they do on how much income you make, it's just all looking at mitigating the bank's risk, which I totally understand. It's trying to avoid, a GFC sort of situation occur, and responsible lending needs to be in place. But then I think as well, it's going to looking at 20 plus properties. How do I actually get there? I think you're going to have to either look at investing with someone, whether that's a sibling or whether that's your partner, having side hustles. So if that side hustle is generating, a considerable amount, I think you'll get to 20 plus properties. But similar to the question before, I don't think it's about how many properties. I think it's what these properties do for you. I also think that there's too many people getting caught up with real estate is everything. Like, I need real estate and that is it. Like, we live in Australia, everyone should buy real estate. I don't think that's the case. I think it's a matter of that velocity of money concept. Use your money. If you can't get a loan, let's look at other avenues to invest. And that's why I look at not just real estate. Despite knowing leverage and despite knowing how it works so well, I will still go out there and invest in crypto because I feel like it's the future. I then go out there and invest in collectibles because I know the returns I can get from there. And that may allow me to build up for my next deposit, bring it across, buy real estate, then actively use the equity there to come back as well. So I think there's a lot there. I don't think it's about owning 20 properties. For me personally, I don't want to own 20 properties. I think it's just too much of a headache. Instead, if I had a strategy of going, well, I need 20 to then go and offload 6 or 8 of those to then buy my dream house, that makes a lot more sense. So I think in today's environment, a lot more difficult. It's not impossible, but I think you've got to be making a lot of money in order for you to take on that amount of debt. Question 9, do you think it's still a good time to invest into property with the current prices? I've got a video about this, should I buy now or should I wait? So you can definitely go check that out here, and there'll be a link in the description below. But I think, it's pretty obvious, for the next 3 to 5 years, we've got rapid amounts of inflation coming into the system. We've got cheap debt. Yeah, okay, interest rates may move up in 3 years, 2 years maybe. The movements are so small relative to what you can gain in that long term or even the short term. I think with how much money is in the system now, it would be silly not to. So for me, it's an obvious answer, but go check out that video. I talk about it in detail around why you should and why you shouldn't in terms of, what you need to look at. So that's where I'm gonna leave my thoughts. And question 10, final question. Thank you so much for watching all the way through, guys. If you're new here, smash that subscribe button. But if the deals are so good, why don't you just buy all the properties instead of giving it to the client? I get asked this question a lot. Like, as a buyer's agent, people
go, well, if the deals are so good, why don't you just buy it? You're an investor. You like real estate. Why not?
And it's interesting. Like, I say this to a lot of people. I say, look, for the clients especially, unless I like the deal personally, I will not push it forward for a client. That's number one. And that might mean that we miss out on a few more deals, might be a conservative way to look at it, but my gut feel is what got me here. So if I trust that again to go, well, all the fundamentals make sense, but if I don't want to invest in it, I'm not going to show it to a client. So that's number one. Number two is I don't have unlimited funds, right? The bank will only give me a certain amount of loan to go and purchase properties. So to see some of these properties that last year that were coming out and I was giving to clients and I'm like, look, it kills me to have to show you this because I can't purchase this, all right? But I'm very different in terms of where I'm at in the strategy versus my client. If the clients are looking at, starting their property portfolio, they're looking at different types of properties, different price points as well, versus what I'm looking for might be bigger deals or might be different sort of deals because I'm at a different phase. So for me, as much as I would love to buy all these properties, have hundreds of properties under my name, it would just not make sense to me, right? And for me, I'm in this game now to help other people go and establish their own financial freedom futures, go and establish themselves to go, well, property can be a really good financial tool for me to get there, right? And that might mean they get to see their kids a lot more. That might mean they get to spend more time with their family, go on holidays. And that to me is going to mean so much more than me purchasing another 3 or 4 properties because it doesn't mean much. Now, obviously, I'm here. I still invest in real estate. I invest in crypto and collectibles and whatnot. But for me, I'm here by choice, right? I want to help as many people as I can. And I think when a deal does come across and it sits well with everything I need to do, well, then I'll go and invest in it. But the thing is, the reality is, I can't go out there and buy 50, 60 properties in a year as much as I would love to. It just doesn't make sense for me and my strategy, but also it's about how I can get other people set up to then set themselves up and their families up with financial literacy and financial freedom with real estate. So that's how I sort of process that, and hopefully that answers your question. But guys, thank you so much for watching all the way through, and a massive, massive thank you for everyone that's watched on the channel, supported me throughout this journey. It's been awesome. 10,000. Let's be on the road to 100,000 now. I'll catch you guys in the next video. Thanks, guys.